Yo, 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 let's go. Go, go, go! Bum, 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 bum. Hey, g'day, mate. How are ya? How's your mum? My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Thank you for being here this lovely Tuesday. Today we'll cover technical analysis, fundamental analysis, gold and oil, and call it a day. Easy peasy lemon squeezy. So yes, namaste, good morning. Make sure you visit TradersWay.com, open up a demo account. Give us an opportunity to earn your loyalty and your respect. We're going to entice you with competitive spreads and fast execution speed. We're going to shower you with wonderful swap and world-class customer service. And I'm here every day to help you succeed as a trader. So again, we'll cover those pairs. I'll try to answer as many questions as possible, and then we'll go. Is that fair enough? Cool. And oh, hang on. Wait, that's not it. I need another one. Boom, boom, boom. And if it gets all weird bright, then maybe I'll put that other one down. But anyways, let's roll. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Yeah, that's weird, right? It's bright again. Yeah, I can't really do a lot to change that. Yeah, then I get darker. And then if I go this way. Anyways, we'll try that. Maybe it's not so bad. All right, so cool. So let's go through the pairs. What were these? These are yen pairs. So yesterday, at this time, 24 hours ago, we had yen pairs all trying to head up, and now they look like they've fizzled out. Doesn't mean it's over. But once again, I want you to take notes. This is important. How is the market behaving now that it's summer? We talk about it a lot. I say after the June Fed meeting, things are going to change. I said it 6 months ago. I said it 9 months ago. I said it 12 months ago, right? And then, 85 months ago, 122 months ago. I mean, right? It's a normal thing. So you got to write it down and almost like leave a note for yourself. Dear me, June 2020. Okay, what would you say to yourself? And observe this market. So you see like things kind of start and then they kind of fizzle out. Then we get some news and, oh my God, it's important news. And then it doesn't really go anywhere. Make sure you observe that and write that down and tell yourself, quite literally, yourself in the future, what you've learned and observed now that it's July. All right, so Euro Yen, there's some hope on the Euro Yen. I'm going to get my drawing tool. La, la, la. Come on, Epic Ben. There we go. So there's a little bit of hope here, right? Thanks, Bucky. Okay. This looks like a clear uptrend, right? And I guess it's 4 hour. So this is 4 hour. So what do we see here? Are they the same? No. Okay. That's 1 hour, so I'm going to have to change it. And then of course this one's down, not up. I mean, we'll say sideways for quite some time. Okay, so they're not the same. We've lost our congruency. What can we learn from that? What's our takeaway? Right, this was 4 hours. Yeah, and so this one's way different than this, and different than that, and that's different from that. What's our takeaway? Trying to get some time in there. Well, if we are looking for a pure risk on play, I want to see all the ends across the board aggressively going up. Okay, and yet Euro is trying to recover after a big loss, and Kiwi is stabilizing after a big rally, and CAD is still in a rally, and Aussie rallied and now is consolidating. So I wouldn't say radically different, but certainly different, right? So you have recovery, consolidation, trend resumption, and trending, right? So they're all a little bit different. So yen isn't necessarily weak across the board in the moment, okay? Which means it's not a pure risk on play. Yesterday we talked about a pure risk off play. What was it? Anyways, it had to do with Swiss franc. Morning, Jean-Guy. Right? So watch your yens and francs, I guess. I like to use them as key indicators. So like, for example, just the very basics. What do we do in this situation? Well, if I was trying to be a bull on this, I would try to buy this roll reversal. If I was a bull on this, I suppose maybe it's a 1, 2, 3, but I'm not so sure. This one, roll reversal, and I feel better on this roll reversal than that roll reversal. And this one is sort of not doing much. I mean, I guess it's closer to this Kiwi, right? I guess being Aussie, that makes a ton of sense. But that's not really an uptrend move, right? This is a sideways move. So we're kind of forcing things into trade plans. In a normal part of the year, I'm okay with that, boxing, trades. But I'm a little cautious this time of year because I'm not as confident that it's going to follow through. So let's take a look at like this Kiwi one. I guess I can go back to the way we had it. Okay, let's be a bull. Okay, this is plan A. So that should have been an arrow. Okay, would everyone agree with that? Okay. If you're a bull, this is plan A. If you're a bull, I guess this is it. This is plan A. If you're a bull, I'd have to use this, like I said, roll reversal. So plan A. Okay. Plan B would be sort of this area. There is no plan B, I guess, double bottom, but it's the same thing. Plan B, yeah, sort of a little lower maybe. Plan B here. Oops. So you can see some of these, they don't even have plan Bs, but that's because we lack congruency. Okay? Some are a lot better than others. Like, for example, what are your thoughts on bears in the euro yen market? Hmm? Do you think there's going to be some bears? You should be able to tell me. You should be able to tell me where they are. You should be able to, even though you can't see orders, you should know where other people are going to sell. Can you see it? Yeah, there's a weekly and a monthly central, right, Dima? So now you're changing sort of what you're looking at. You're assuming some people are going to sell this. You might be thinking of buying, well, maybe, right? The first opportunity is a role reversal. Suddenly, with that in mind, it doesn't look as good. So now, one of these things is likely to happen, right? Well, Dr. Range says yen is stronger. Well, depending on the time frame. Max is loving the summer school course. Right on, man. Dr. Range says for now. No, it's not for now. It's depending on the time period. Okay. So I would say on like a 1 minute chart, it's bearish. I'm going to guess on like a hourly chart, it's still sort of bullish. On a daily chart, on a daily chart, it might be bearish. So, anyways, hey, good morning, Daniel. Boom, boom. So, anyways, it's just we need to be aware, right? And you need to be able to analyze the quality of your setup. Remember, you already know if you're a bull or a bear, so that's not a problem, right? Yeah, well, I'm not saying you're wrong, Dr. Rage. I'm saying you can't be as simple as saying it's bullish or bearish because it's all relative. Right? This is not an absolute thing. So you always have to define on what time frame and all that. Right? Yeah, right, Chuck Duck. So, and then of course, my assumptions, which are right or wrong, we don't know, but I have an assumption that in the next 10 weeks, these pairs are going to be bullish. So I'm filtering everything through that as well. Okay, and it may be totally wrong. I'm okay with that. It's just my current bias. Okay, anyways. So let's take a look at this. Like this one might be based on your analysis of where the bulls and bears are. You might like this one better than the first one. See, I think the bears would be like up here. Okay. If you're a bull, I might like this one even better than that one. Okay. But there's a danger to that because the bears might have already sold. You see? We don't know. We don't know. We don't know. So you have to make a choice. Red pill or blue pill? You have to make a choice. Like what price do you want to take a shot? Your bias is already set. So now you're just picking price and then you're waiting for time. That's why we do plan A and plan B. So on this CAD yen, that's plan A for me, and there's plan B. Those are the two prices. I don't know what time, but I know the prices. Okay. Jimbo says, how about the monthly pivot point? Yeah, well, notice how Euro yen, there's some sort of consideration for MPP. Kiwi yen, there's some sort of consideration for MPP. Even Aussie yen, there's some sort of consideration for MPP. But it's not in play for CAD yen. Right? Now, Brooke takes the angle that I take. And this is a key lesson, a key point in my training with you guys. Right? The choices were made actually days ago. I'd even argue, Thursday and Friday, if you hadn't taken the trade, you were certainly ready on Sunday. Right? No, I didn't study game theory until a couple of years ago. So I think 3 years ago, I took a class on international political economy. I think it was through the Harvard Kennedy School. And one of the chapters we did was on game theory. And I'm like, ooh, that's interesting. So then I took a class on game theory. The whole class was game theory. And I'm not sure what school he was in. Maybe it was K school as well. But anyway, so I ended up taking that, which is quite interesting. But, I was doing pivot points 15 years ago, right? But, yeah, game theory. Somebody asked, I think, in the chat yesterday, like, how would game theory help you as a currencies trader? I don't think it would, except, doing, math and strategy education, keeps your mind pretty sharp. It's like, why work out at the gym if you're not a professional athlete? You're like, well, it keeps my muscles and my heart strong. Okay. Korea's great. Love Korea. Yeah, Dr. Rage, but I wrote the book so long ago, like 15 years ago. You might as well, take a course at fxbootcamp.com. Obviously, a book's going to be cheaper than a full, course, but if you have the means, fxbootcamp.com. All right, so anyways, you got to look at these three options, right? You know your strategy, your bias, if you're a bull or a bear. So the rest is just simply which one is best, or what is best? Well, I suppose best is biggest reward, but I've told you don't expect any reward. Therefore, how about less risk? Okay. So if I was a bull, I'd probably go CAD yen first. The interesting thing is you should also be cognizant if they all start coming down, you should walk away. Okay, anyways, let's move. I gotta go. Ah, come on. A news thread. I had another quiz yesterday. Got 100%. Killing it, man. Killing it. There's a paper due today at noon. I submitted it on Saturday. But I'm tired, man. I'm tired. But anyways, all right, so let's move. This is Beast. We didn't look at Beast, but look how nicely bearish that is. Isn't that gorgeous? Gorgeous. Maniper, thank you. Yeah, I get a lot of heckling over the charts, but people don't understand. I don't print the book. Yeah, it's Wiley's book. People criticize that there's a lot of spelling mistakes. Well, first of all, I'm not a professional writer. It's the first book I ever wrote. And you hand in your manuscript to the publisher, okay? And the publisher's supposed to do that. So again, I mean, I suppose it was me. I actually misspelled the words, but the publisher didn't review anything. You'd think they would, right? And I swear to you, they asked me if I wanted to do my own bibliography. I'm like, let me think about it. No. So anyways, it's just funny, the world of of publishing. But anyways. All right, so take a look at that. This might be a clue to the other questions. The other question is the yens. Are they going up or are they going down? Well, remember, we're looking for congruency. Some are decidedly up, some are decidedly sideways. No, up and sideways. The other euro yen is down and sideways. So is there any more information? Beast is much more down than up. So that means it could pull euro down with it. And then if euro comes down, maybe the commodity pairs come down. That's risk off. Okay? So we don't know. We never know. But this is why you have a bias going in. And then you can pick your lines. So let's just say a week ago. About a week ago. You had a bias. What would the bias be? Okay. The prophets of rage. Huh? Guys? Hello? Several days ago, if you were looking at this chart, so all you saw is what you see now. Would you be a bull or would you be a bear? If this was the only currency pair on the entire planet. Michelle says down. Chuck says down. Raymond says down. I gotta get to you say your name better. But anyways, bearish. Jan. Bullish. Oh, whoa. You can't be bullish until there's a reversal pattern. You can look at it that way. Brooks is counter trend. Yeah, maybe. Yeah, I'd be cautious. I try to be cautious. Look at reversals. Okay. So in any sort of scenario where a reversal is a maybe, I still consider it as a consolidation before. So I'm not saying you're wrong, because I'm sure you can pick out 100 different times where I'm contradicting myself right now. Okay, but I'm a human, and at least I can admit it, right? But I try not to assume reversal. Now I might be a bull fundamentally, and I'm waiting for a reversal, and I'll set it up and all that kind of stuff. Okay, but if all you had was this, okay, you can see it was predominantly bearish before, reset predominantly bearish before. Now going into this week, I suppose you could be a bull. You'd be buying down in here. Okay. But remember, I prefer not double bottoms, right? But higher highs and higher lows, right? And this is a double bottom. You can front run basically a 1, 2, 3. So if you bought down here in the middle of last week, it's okay. It's just a very aggressive trade because you're buying into the moving averages, for example. It's a cautionary tale, right? I mean, you can do it faux show, but you should recognize that that's aggressive. Okay. Now, if you went up to the 55 EMA, so let me change it again. If you bought here and it went to there, you'd feel much more confident because it would probably come down. Because it's a 55, it would come down significantly and then maybe up, right? Okay. But let's move forward a little bit. If it was Sunday and you were looking at more recent, okay? So rejection off resistance all the way down to S2. That's a big downward move. So typically what I would recommend is, that's bearish over the previous week, right? So like look where how the central pivot is moved. Okay, that's called a step down. Yeah, okay, again, you can be bullish here. And there's 100 examples, I'm sure, you can show that contradict what we're talking about, but that doesn't make it always true either, right? So if you're trying to be a trend trader, you're going to have a plan A here and a plan B here. I don't think there's any doubt. You would short a weekly M3 monthly central pivot. You would. You just would. If you were a bear, you would. There's no discussion about it. It's like you would have to, almost by law, right? The bearish police would arrive and like, you're guilty. You're not a real bear. And then central pivot, monthly pivot cluster here, you just would have to do it. And of course, both of these are fibs, probably 3A2 and a 50%, right? Okay. Now, if we breached higher than those, then yeah, I would say the following week you'd probably be bullish, right? Oops. So anyways, okay. That's a classic bearish swing. Okay. If you took the swing trading course, that is classic. Okay. Like, not just that it fell down. Okay, that's easy enough. But like, oops, that was supposed to be reddish, pinkish, whatever. But specifically like this cluster, the 3A2, the monthly pivot, the weekly pivot, that's just classic. Okay. Phone is buzzing off. Anyways, classic swing trade. Same thing for Euro Aussie. Yeah. So you can see that the European currencies are weak. Okay. So we know that. So yesterday when the yen pairs looked weak, the yen looked weak and the yen pairs were rallying, I said, you probably would skip the beast, right? Skip it. Okay. So this is valid if you're a bull. This is easier if you're a bear. Okay. Remember, in July, I don't expect big yen rallies. Also, okay, and then one last thing. This should have been planned out no later than Friday. So I think it was Brooke that said, this was a trade on Sunday. Actually, that was a different pair, wasn't it? but still, this was something Thursday or Friday you would have planned. Okay, you would have said, well, I don't know when I'm going to get the opportunity, but I know my prices. I would sell there and I would sell there. Okay, those are plans. Those are trade plans. Now, some of you guys, I think, make trade plans on 15-minute charts. I think you should make trade plans on 4-hour charts. And then when you get near your price, remember, you don't know the time, but if or when you get near your price, then you drop to a small time frame, and then you look for trade setups, for triggers. Okay? And that would be reversal patterns, moving average crossovers, oscillator crossovers, whatever. Okay? It almost doesn't even matter at that point, right? I used to joke, once you get to this price, look for a 3-candle pregnant nun pattern. 3 pregnant nun pattern. Like, it just doesn't matter. As long as you short here, dude, come on. Clearly resistance. All right. Swissy is weak against the US dollar. Let's make sure these are all, let's make them hourlies. Always make sure you have the same time frame when you're comparing apples, okay? Cool. WTI, this is a canary in the coal mine type of asset class. If you're studying macroeconomics, it still astounds me that I now have a degree in macroeconomics. Love it. I'm so happy about that. Okay. So if you're studying macro, we would look at WTI or Brent. Brent is fine too, as a demand for energy. A demand for energy is typically a sign of an expanding global economy, and it tells you a lot. Okay. Now, oil can also be affected by supply side exogenous shocks and all that kind of stuff, but I like to look at it for demand, and then if I see something interesting, I'll try to justify it or disqualify it based on supply. You can say, yeah, well, oil's up, but there's a fire in Libya. There's always a problem in Libya, right? And that's jacking up prices. Okay, but short of something like that, right? If oil goes up, that's generally a good thing, and I might be in a risk-on mood. Okay. So what do you want to do here? Well, it comes down to if you're a bull or a bear. Would you buy here? No. Impossible. Okay, totally impossible. So let's talk about bulls. Let's talk about bulls, baby. Let's talk about you and me. Okay. So bulls have already had their chance. Okay. If you buy now as a bull, it's a bad choice because you are at resistance. Okay? And then up here, you're going to be at resistance. And then up at here, you're going to be at resistance. So you could probably tell now that you basically, how would you say it? Well, this was an opportunity, and I would say even down here. And then I would look like maybe, just maybe this M2, And you say, okay, so this is really a secondary move off of the primary central pivot, monthly central pivot. Okay. RC, when is the new swing trading group? Uh, Generally, that's the third week in August. Sometimes I start that in the second week of August just to get people warmed up. Okay. So what is that, a month from now? So anyways, this is a function of the other one because it's a smaller time frame. So there's this plan. If we drop down here, then I'll want to see double bottom, higher high, and okay, and end up buying the same plan here because I'll end up buying it there. Okay. Right on, Raymond. Yeah, Chuck, fracking for sure has had an impact on supply, right? Yeah, absolutely. And if you're a bear, right? You're bear on oil. Is a good start. And then this whole area, I would try to play into one trade. So I might trade here and have my stop above, which means I also get this trade in there too. Okay? Because let's say if you had a plan C would be this, right? So I might as well sell here and price in basically in the risk that trade and put my stop up there. So I'm like, well, if this doesn't work, this will still work. And I know that because I'm a bear, so I believe that. And so selling here or here, I'm basically indifferent. Now, you might find that this is far enough away that it costs too much money, so then you drop your contract size. Okay. Oh, no, but Simon says about the trade planning app. I'm going to do that as soon as I get home for you guys. I gave a document to the programmer, requirements doc. He's like, this isn't good enough. I need more detail. And I just did not have that kind of time, especially right before going to Harvard. So when I get back. Yeah, Chuck Doug. And then one day they'll trigger a global earthquake. Can you imagine? The entire world all at once going into an earthquake. And then the zombies will rise from the dead. We'll have our zombie apocalypse. It'll be because of fracking. Gold! What do you think? Clear as mud, right? Well, as long as we're above that black line, it's still technically bullish from a pivot point of view. Okay, so back in June, you might have bought it here. Okay, back in July, you may have sold it here. Cool. That's it. That's what bulls and bears do. If you're a bull, you would have tried it again here. And you might actually try it again here. If you're a bear, do you sell here? No. Where do bears sell? Here. Or here. You see? So something I keep trying to impress upon you is that the market's very inconsistent, and almost always when you look at your charts, it doesn't tell you what to do. If you are being trained by someone else that's telling you that this means to buy and that means to sell, you're not getting reality. Okay? Your job is to analyze fundamentals, global macroeconomics, central banking policy, the wizards pulling the chains to make these things happen. Technical analysis doesn't tell you what to do. It only tells you the price that you'd be interested in doing whatever you want to do. Otherwise, you're always going to be always late. You're always going to be a slave to the markets, and I don't think you'll be consistent. I don't think you're going to be that profitable. Okay? All right? So imagine if you were a bear. Let's do a different color here. I guess I'll do blue for bears. You would have started out the month and you're like, okay, well, this is going to be interesting and this is going to be interesting. Oh, and you get a shot. All right? Cool. And then this week you say, okay, so what's my plan? Well, this will be interesting, and I'm not sure what I want to do up here, but we'll see if I get a reversal pattern between those prices, right? So a bear would have sold here. We still don't know if they're right. It doesn't matter. The stops at break even, they have an opportunity, okay? The same thing here. That all of this is very, very tradable, whether they put one here or try it again here. If we get back up here, they'll try a second, third, fourth, fifth time. Okay. This is definitely bearish here. Okay. And if it breaks, they'll look like geniuses. But under these current conditions, it's probably 50-50. Like, we don't know. But if you're always swinging both ways like a broken gate, you're not going to be consistent. And it's doubtful that you're going to be the probability of you picking the right one each time, or a lot even, is very, very low. And especially if you're going to be basically making things up as you go, try doing that for 20 years successfully. You just know it ain't going to work. There's just no way you're going to keep it up for 20 years. Like, think about it, 20 years. I was a young man, right? I was a young man. I was a venture capitalist. So you need to be the one that is consistent. Same thing now if you're a bull. Let me try to find yet another color. I'll go green. Bulls would have bought here. Okay, that's cool. Up, 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 down, down. No, maybe. You might have tried in here. And then that failed. So the next week you're like, there, but it was too low. So there. You might be trying in here. This is an M2 and back to the CPP. Okay? Like, lower than that is really, really bad. Higher than that is out of price. It's too close to resistance. So there's like really only sort of two probabilities, right? Like, for example, you can't buy here because that's where bears sell. I mean, it's obvious. There's a role reversal, and you don't buy below rising to a central. You buy above falling to a central. The central should be support, not resistance, right? So you can see, like, as a bull, that's impossible to buy there. You might have tried here last week. I mean, but that fits the same idea as this. So there's only like one opportunity, one potential opportunity this week as a bull. And it's the same price you would have got like last Friday. So it's the same trade whether it was Friday or Tuesday. It's the same price. It doesn't matter. That's why, right? That's why the time. Well, we're analyzing the price, Max. Then once price get right, like the price in which you would buy if you were a bull. When you get near that, that's when you can drop all the way down to smaller than that. But tick charts, no. I don't think MT4 even offers tick charts, does it? Years and years and years ago, I recorded something on Bloomberg, I think it was, and I had sent out a tweet. I don't know if it was a tweet. I sent out something, and I said, "Hey, FX boot campers, I'm in New York City. Come hang with me while I smoke cigars." A bunch of people showed up, like 25 people showed up. I'm walking to the cigar bar. I'm in my suit and tie and everything. Got my 7-fold silk tie. Boom, there's a huge crowd. It was great. And it was most people at that time that were not paid members. They're just people interested in boot camp. And they're like, hey, here's an opportunity to hang with Wayne. So we went down there, we're smoking cigars. It was really great. And this group ended up actually, they knew each other. And one of the things I'd been trying is trading the 10-second chart. So I think it was on Owanda that owned a 10-second candle chart. And I don't know if it was the chart or them, probably both, but nobody there made money, and some people lost a lot of money, right? And one of the dangers of that is people take let's say what I'm teaching now. Like right now, I'm looking at a 1-hour chart, and I'm teaching you to look for patterns at specific prices, right? And to take that and to trade it on a 10-second chart is not necessarily going to work. You say, well, what he's talking about works on an hourly chart. Yeah, but that, a 1-minute chart or less is quite different. Okay, I like the 1-minute chart. I don't know if I'd get into a tick chart. I mean, another thing is, compared to when I first learned how to trade Forex now is very, 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 very slow. So one worry is that you're on such small time frames out of like boredom. You want to see the movement, you want to see the action, but that removes, for most people, maybe not for you, Max, but for most people, it pulls them away from proper planning, and you're just trading price action. It's going up and down and up and down. You drop a lot and pop a stop, and you're forgetting where the proper prices are, the proper support and resistance. You're not planning 4 days ahead to trade on a tick chart, right? So be careful is all I'm saying. Why do I not trade tick charts? They're just not necessary. You can certainly use them, I'm sure, but I don't find that they're necessary. Oh, thanks, Brooke. Okay, so anyways, I'm trying to get you guys to establish your bias, and with that, you can easily find your prices. If the market approaches your price, then you drop into a small time frame. Hey, it could be a 1-minute chart if you want. It could be a 5-minute chart. It could be a 15-minute chart. And you look for your trade, and you take the shot. The price should be the easiest thing. So again, you are probably, if you're new to Forex, let's say newer. Let's say you're in your first year or two. If you're brand new, you're trying to just figure out the basics, right? But let's say you somewhat know what's going on. You're most likely complicating things. And maybe it'll take you to get, year 5 under your belt before you say, oh, maybe you need to go through the pain. You need to go through your meat grinder. We all tend to do it. And it's it's part of like a PhD thesis, really. It's like, why must traders go through a gut-wrenching, soul-crushing experience right before they become successful? It's a really interesting thing. Maybe you don't see it anymore. Maybe it doesn't happen anymore, but it seems like it's almost necessary that finally one day, after looking into the abyss, you have an epiphany, and you see the matrix, and you're like, oh my God, all I have to do, right? Oh my God, all I have to do is buy its support if I'm a bull. Oh, right? You see what I mean? Like, oh, I get it. I have to wait for the market to be bullish before I enter, right? But yeah, so I've had those times, guys. I really had those times. Oh, is that right, Trend? Yeah, no, you really, yeah, no. Hang with us, Trend. You have a family here now of traders. Some of us are very, very experienced, and we want to keep you alive. You should never be in a situation where you almost blow up all your capital. It should really be impossible. It should take you a good year to bleed to death. Okay? And of course, if that's happening to you, at some point you need to stop, right? Like, dude, put a tourniquet on that, man. You're bleeding all over. Okay? So, yeah, been there and done that, right? So, anyways, yeah. So thank you guys. Make sure you subscribe to the channel, leave a comment, leave a like. It's important to YouTube and it helps the community. So please take a few seconds to really, because what happens is you found us somehow, and it doesn't hurt to save a few other Forex souls. So please like and subscribe and comment. If YouTube is not notifying you, you can use the Twitter account that automatically sends a tweet when I start streaming, and that's at twitter.com/fxbootcamp. If you want to download my pivot points and chart templates and profiles, that's at charts.fxbootcamp.com. And of course, join the Traders Way family. All right, that's your way to pay it back, so to speak. That's tradersway.com. And with that, peace on earth. May the pips be with you. May our profits be above average. I will see you tomorrow. Tomorrow's what, Wednesday? I will see you tomorrow. I'll see you Thursday, and then I'm flying home Friday at like 4:30 in the morning. So I'm not going to be able to do a webinar on Friday. Okay. Jimmy Williams says, did I look at Pound Swissy? No, I did not. All right, thanks, guys. See you tomorrow. Oh, I got to turn my marker off first. Beep. Have a wonderful